All right. My name is Chris Campbell. I'm a practicing CPA, and I work with small and mid-sized businesses and individuals to help them pay the least amount of taxes possible while keeping them out of jail. So today I wanted to talk about the extensions and how to approach extension. And as I'm filming this, we are in extension season, fresh off of the tax deadline. So I filed a ton of extensions and it actually starts a new deadline, right? But we're in the period where it gives us a little moment to catch a breather. So that's currently one right now. But as I filed all of these extensions, what I look to do is just optimize my clients' tax liability. So I have a lot of clients, especially those that are employed business owners. Taxes are not the most favorite thing for anyone to deal with, right? So a lot of business owners rarely file by April 15th, right? They know that they can file an extension and you don't look at it as a real deadline. And it could be for a number of reasons, right? One is you don't have your documents together. What can be common is that, especially if you're involved in a number of different investments, whether that be like K1s, whether that be in partnerships that require to get K1s done and presented to you, depending upon the number of the investments that you're involved in. A lot of these are just not done by the 15th, right? So you're forced at that point to file an extension. So many people fall under that. And for those of you not familiar with what a K1 is, if you invest in a partnership or business, if you're a passive investor, say in a company, sometimes they're structured as partnerships. What happens is that in a partnership, for tax purposes, you have to report your share of what the partnership generated, whether that be a loss or a gain. You have to report that on your personal taxes, and the partnership provides to you what's called a K1. So if you're involved in these investments, you got to have the K1s to complete your tax return. So I see this often with folks that may invest in funds. So if you're invest in private equity funds or you are in venture capital, as far as you investing in the funds, you need K1s, right? Also real estate ventures. I see that a lot with real estate ventures. So there's partnerships that are created, you need to get a K1, but you're waiting on those, right? And a lot of times you don't get those by April 15th because they have their own deadline and extension deadline. So they usually utilize those extension dates themselves. So there's a number of reasons why you may not even be ready to file. But point of this video was what I see a lot is that you know that the extension is available to you, and many folks just blindly file an extension. They call up their preparer or they may do it themselves. And I get that call and email, hey, file an extension for me, which I have no problem. We can do. I don't really need any additional information, especially with long-term clients. I have all of your core data, really just your name, address, and social. So that's really all you need to file an extension. However, the point of this video is that you should do your best to make some sort of estimate as far as what you may owe and make a payment by the April 15th. What many people don't realize is that an extension gives you more time to file the return, but it does not give you more time to pay what you owe. So whether you file your extension, whatever it is that you owe, the clock for interest starts after April 15th, whether you have an extension filed or not. By filing an extension, you are avoiding late filing fee, which can be pretty heavy. I don't want you to think, well, if I'm not paying anything, you need to bother to file an extension. No, if that's an additional penalty on top of the interest that still accumulates. So you still want to, at their minimum, file a return and not pay, but you may want to do your best to get a ballpark figure of what you're owe and try to pay what you can by April 15th. So what I've done with many of my clients is that prior to the 15th, for those whose info that I had, and that I had more information, I took a few minutes and then tried to ballpark. So you go to the client and say, look, I'm not ready to file the whole return because I did a very high overview of it. But from what I see, here's what your balance is going to be. We'll make sure if you have the capital available, go ahead and pay it by the 15th along with your extension, and then we'll all sort it out. So I try to be more on the conservative side as far as what I think you'll owe. I try to actually have you overpay. So that way, when we do file the return, you're more than likely going to get some of that back. unless I get caught with a curveball that came out of left field that I had no clue. But for the most part, you try to be conservative, and then even if you overpay by a little bit, then you'll get some of it back when it's time to file. Because again, that interest accumulates. So if you're waiting funds, you're waiting for this or that interest is still accumulating. So for those that may not necessarily have all their information in, again, you want to try to do your best to guesstimate. So you're involved in an investment and you know you get a K1, take a look at the prior K1s, or your preparer is good at it. If you just let your preparer know, assuming that you've been with them for a while, and just say, look at my last year's return, send them the major documents. So if you're working like W-2, some of your investment income with your business, send them a ballpark figure as far as with the business. So even if you don't have anything all together, send them a most recent profit and loss, or tell them, look, go off of what we had last year with business, increase it by 10, 15% as far as the income, and then do a guesstimate based upon that. So that will be the way to go, and really do your best to guesstimate so that you can get something in, if you can. If you can't, just know that the clock is running and it's ticking. But what you may even want to do is even start making payments even during the extension time. So if or a tax person comes to you and says, well, you're going to owe, say, $10,000, you don't have the $10,000, and it might be another couple months before the return is prepared, you can start making payments towards that balance even before the return is filed and even after the extension. Because the idea is that those payments get reported from the day that they're received, and then you're at least stopping the clock, right? Reducing the interest, or at least on those funds, right? So let's say that, for example, you have a $10,000 bill, you don't file your return to, say, July, right? But let's say you make payments between April and July, and then come July, you pay the rest, right? You're going to save interest on the amount that you paid from April through July, as opposed to waiting until July and then still have the $10,000 that's due. So pay what you can. No need to wait until you file, especially if you have an idea of what you owe. Start making payments. You don't necessarily need to wait for a formal payment plan or wait for a notice to make payments. So it could be a good way to save yourself some interest and penalties in the long run. Hopefully this was helpful. If you have any additional questions about this topic or any other tax or accounting related questions, feel free to reach out. I'm happy to help. So that's all for now, and I'll talk to you in the next one. Take care.